Well, this is obviously something you don't want to see happening to your stock. PayPal here falling on Q4 earnings after hours around 17% today. We have to dig into the earnings report to see what caused this drop. Is it justified? And what should you be doing as a current shareholder? Or if you're someone that maybe looks into, buying the dip on this one. So let's get into the headlines of the earnings, and then we'll dive a little bit deeper into the actual earnings report to see what happened. But yeah, in overall, so PayPal reported for the quarter $1.11 earnings per share, and the analyst estimate was around $1.12 a share. So we were slightly below, but we basically met expectations here. So this is, I don't think it is the reason for the big drop here. Or similarly to that, revenue actually increased from 6 to 6.9 billion for the fourth quarter compared to prior year, which was only 6.1 billion. So we made an increase here. The last quarterly performance brought the annual revenue to 25.4 billion for 2021, which is up from last year's 21.5 billion. Also, total payment volume has gone up to 340 billion, which was slightly below the estimate. And obviously, we had an increase as well in the active users, which are now 426 million. So if you look at that, and if you look at the quarterly key metrics here, so all of them seem to be looking pretty decent, right? So, I mean, we have massive payment transactions. We have a lot of active users. Everything is ticking up. Earnings per share were in line with expectations pretty much. So what happened here? So I think the key, the sort of the disappointment is coming from the guidance, because these days we know that investors look a lot at the future guidance. So if you meet expectation or if you're slightly above, doesn't mean that your stock will pop on earnings. It is more around the guidance of going forward. What is the company doing in the next 12 months? What are they projected to be doing? And here we still have eBay. So if you don't know, obviously PayPal and eBay, that was that big corporation which made PayPal famous back in the days, over 10 years ago. And eBay is slowly spinning off their revenue as they evolve and create their own payment solution. They're slowly going away from PayPal. So every quarter for the past year or two, we have kind of a decreasing impact of decreasing eBay sales while the company is still growing. So in every earnings report, you will see that the company is reporting total revenue, which includes everything, and then adjusted to exclude eBay, to actually show that the remaining revenue portion, which we'll see later, is growing at a much faster pace than the total revenue suggests, because we have that impact of eBay. And due to that impact, guidance was pretty much reduced, and the guidance is the key issue here. We have reduced guidance of for the oncoming year. So we're expecting the revenue growth, for the first quarter to only grow about 6%, 14% when you exclude eBay, but the 6% is the first issue. Plus, for the year end, they're suggesting that revenue will only grow for the 2022 as a total year around 14 to 16%, whereas analysts had made that estimate before that it was around 17 to 19%. So definitely around 2% less than expected, which obviously we're talking about billions here, right? So in the case of PayPal. So let's have a look into the investors report to actually see what other interesting information there is in this. Obviously, in each investor report, they're always trying to sell you off their newest products and their newest ideas and their future vision, which is important. But I usually skip that one first, and I'm sort of a numbers guy, so I look at the financials first. I look at the statements first. So here are some of the key metrics of PayPal. So if you look at that active accounts, we definitely have a year-on-year growth that has been slowing down in the last 2 quarters. So this is something we have to look out for. The payment transactions also been slowing down, but still keeping it up over the 20% year-over-year growth. So that means that everything is still growing, but net new active accounts are actually slowing down. So we have to keep an eye on that. I mean, obviously, if we can increase the revenue per account or per user, then that might not be a big issue. Yeah, as the company matures, obviously we're expecting a decrease there, a deceleration in growth. So as long as we can offer more products with their all-in-one app, which we want to talk about soon, then this might not be a big deal, but it's definitely something to keep an eye on. Other than that, I mean, total, the payment volume is massive and it's ticking upwards over year. The growth rate has also been slowing down, especially in the last 2 quarters. So we do think that there was a pandemic-related, deceleration now that everything is opened up again. But in terms of the absolute numbers, we do see a continuous increase quarter on quarter. And the take rate, so what actually PayPal makes out of this volume, is pretty consistent, although slightly ticking down towards the 2% mark from 20% before, which, similar to the, active users. So obviously as the user growth declines, the take rate is hopefully staying within that 2% range. As, the lower it is, the less profit we're essentially making. This is showing you the quarter-on-quarter revenue figures. So this obviously includes eBay. But even without that, we still see massive, year-over-year growth rates. Also deceleration, which is in line with the volume and the net active user deceleration. But in terms of the absolute numbers, we do have very strong revenue. I mean, every quarter, pretty much more than $5 billion. Which is, and they are highly profitable. So they're not in a growth phase and they're not a premature business. So they make a lot of free cash flow, which we actually see down here as well. Which is nice to see that although the growth is slowing, we've actually been able to increase, free cash flow 50% from the last year, pretty much. Although we've seen, only a slight increase in revenue over that time. Which is pretty good to see. So in terms of profitability, we do see an increase here. And then if we scroll down a little bit more, we do see the guidance numbers here. So this is for the 3 months ended March and for the 12 months for this current financial year. So we do expect still, 15 to 70% for a size of PayPal. Although it's lower than the 17 to 19% expected, and we do talk about billions here, it is still a very, very good number, a very, very impressive number if you can keep that growth rate around that 20% mark, if you round it up, over the upcoming years. So there will be years where it will be 25% or even more. And, if you keep it around that 20% mark, which we've seen in the recent years, then I do think that revenue growth is still very, very good at this point for the maturity level of the company. And as they're expanding into, new products or a new suite of products in their apps, it is definitely a good compounder over the long term. So I think that is something to keep in mind here. So obviously now we've already had a drop in the recent months with the interest rate fears and so on, and fintech pretty much has taken a big hit. Now we've dropped again on the earnings, which we were hoping for maybe a bounce back upwards, which didn't happen now, obviously. But if you have a long-term mind for this one, then you do look at a 20% compounder for the next, foreseeable future. At least for the next 5 years. So this is actually, Let's head back into the actual earnings report, because as I said, there they're basically trying to sell you the company, right? They're trying to get you invested or stay invested into the company to keep it popular. So that's why I didn't start off with that. I wanted to start off with the raw numbers, but let's just head into it to see what they're actually projecting here and what their long-term vision is, which is obviously important, as I said. So if you exclude eBay, we do have around 20% revenue growth annually. So as soon as eBay is out of the numbers and is basically gone from their financial statements and from their earning presentations, you will see an uptick in the revenue growth numbers, which might be actually a positive surprise, although it shouldn't be a surprise because everyone knows it. But as soon as it's on paper a 20% growth year on year, then the stock might get an uptick from that longer term. So as soon as we get rid of the eBay numbers that are kind of dragging everything down, so this is something to keep in mind. Then obviously total payment volume, I mean, we're looking at a $1.25 trillion this year. Expected for 2022, $1.5 trillion. I mean, that's just massive. Like, they're one of the largest players, and I mean, you just can't argue with that fact. And they're just everywhere. Everyone knows about PayPal, so they have a really strong position still in the market. And in terms of their long-term vision, so obviously Venmo is playing a key role here. They keep expanding and they keep adding new features to the app, but their key focus at the moment is that all-in-one super app. So the digital wallets, which funds like ArcFund, they are projecting this to be a massive market in the future of trillions of dollars worth. So that if you're one of those key companies that can position themselves right now into that digital wallet space, then you're probably a winner long term. And that's exactly what PayPal is trying to do, and that's exactly what they also mentioned in their conference call. So they did issue a new app with the digital wallet redesigned, and they've seen a massive increase in merchant leads. So you clicking in that app of PayPal through the merchant's website and ordering something there. So they've seen a 700% uptick in that once they've redesigned and published their new app. Same goes for crypto. 40% crypto users, 40% more first-time crypto users since they've launched that update. So which is just amazing. So it seems to be a convenient way of how to handle your payments and how to shop online as well. And that's when you see. This is one of the most impressive slides, I think. It's just one of the most accepted digital wallets globally. So we have huge players like Apple, Amazon, Google, which all have a fair share of the market, but it's just PayPal has a 76% acceptance rate here on the 1,500 largest online retailers across North America and Europe. So they're pretty much in almost any big online shop that you want them to be in. So if they can position themselves right with that digital wallet, they have a great long-term future ahead of them. So there's obviously this near future headwind, and this is why the stock reacted in the way it did. But I do think that if you have a long-term vision with that one, you really can't go that much wrong. And the lower it falls now after hours, we'll see how it trades over the next few days, the better for you long term. So I do think we will head into, in terms of valuation, we will head into I think it's a mid 25, 26 PE, forward PE, which is very cheap historically speaking around PayPal. So it does get very interesting if you haven't yet invested into it. I mean, I would strongly suggest you to do some due diligence and see if that would be a fit for your portfolio. I mean, I'm invested in, and I might consider to buy on this dip here today because my cost basis is actually higher than that. So it does get interesting for me as well. So this is all I wanted to talk through you about, PayPal's earnings. Obviously massive drop. Let's see how that plays out over the next few days. And then, yeah, let me know in the comments what you are thinking about PayPal, if you're buying, if you're holding, or if you're selling as well. Or if you don't, what other stock are you interested in? What other stock are you buying this week? See you next time.